Welcome everyone. We'll start our third lesson on a strategic audit. So we'll go through what we learned up to now. First we'll recap and then we'll go through today our LO3 and LO4, our learning outcome 3 and learning outcome 4. So under different assessment criteria as well. So we'll start. So up to now we already covered two learning outcome. Sorry, learning outcome one, we learn about understand the history and the current audit processes and procedures. So anybody remember what we learned on that? So
So we
LO1,
learned
LO2.
about audit means like the verification of accounting data and its accuracy and reliability. And we talked about some history of the procedures of audits and some kind of independence to what kind of threats auditors face and to their independence. And in the second learning outcome, I guess, more about some other things. I'm not having the slides right now. Sorry about that.
Yes, under learning outcome two, we learn about some legislation, IFAC, International Federation of Accountants, and audit standard 300 we discuss as well. So we discuss about audit planning, how we can do audit planning, how we can conduct audit. We discuss about International Ethics Standard Board that set the ethics for our accounting bodies, and as the auditors we need to follow those ethics as well. We discuss about PP, popular people chat in office. The abbreviation stand for professional competencies and due care, professional behavior. We chat C stand for confidentiality. We discuss about integrity. We discuss about objectivity. So these are all, when we do audit, all these professional code of ethics is supposed to be followed. So these are the quite crucial to be followed. So we can really, not compromise the audit integrity, honesty, and objectivity, especially, so we need to be look around. We discuss about how we can update knowledge, role of CPD in audit. We discuss about the audit environment. So today lesson we will be moving forward. We discuss a bit, a discussion which we relate with the previous learning outcome as well, but today lesson will be focused on understand the audit strategy. What is meant by strategy, where this word came from, and how we can how we can make the strategies for audit to be run effectively to achieve the organization objective. We already mentioned a lot of audit failures happen in the past, especially the Enron collapse and the World Telecom due to the poor audit. After this, these incidents, lot of new standards arrive, all been set up, so we need to be follow these standards. So audit strategy, the word strategy is derived from Greek word strategist, which is mean, used to be in a military to counter the enemies. But here the word strategy mean action planning. So how we can do action planning to achieve our audit objective, because any audit activity have objective. Objective of audit or account is to provide the true and fair views about accounts to our user, to our all stakeholders, so they can make the future economic decisions based on these are observations are audit. So which will go through risk. So what sort of the risk we normally involve in audit? What is meant by risk? Risk means the likelihood of occurrence something. Risk not consider always the bad thing, but as a business we need to be look around how much risk we can bear, or how much we can quantify them, how we can how we can minimize those risks. So that's all we'll go through under learning outcome 2. So we'll discuss the under learning outcome 3, we'll discuss about what sort of, the auditing process may include the requesting document, how we can plan audit, holding open meeting, draft reports, and meeting. So we'll go through some sort of, discussion about meeting, but in the last learning outcome is a link as well, so where we can finalize our audit. So audit strategies, audit planning, plan what is where we are, where we want to be, go, and how we can make a plan. So learning outcome 4 will about audit risk. What is meant by type of risk in audit can be inherent risk, control risk, detection risk, how we can, and all these, and financial audit. What is meant by how we can do financial audit. So all we wish, will achieve during this lesson. So anybody, any question up to now?
Yes, sir. Good, sir.
Okay, so we'll start today lesson. Okay, welcome everyone. We'll start our is based on learning outcome 3 and 4. So I just mentioned their lesson 3 and 4 together as a combined lesson, because these learning outcome is very small, and really but we need to be focused on the key points, to learn the learning and to meet and assess, to address the assessment criteria. So these 2 learning outcome, welcome everyone. You all know me. My name is Anjum Satar. If you have any question, drop me emails. Please try to attend all the sessions if you can. Otherwise, listen. If you have any question, just drop me email. So today, first learning outcome: understand the audit strategy, which we'll go through, and understand the risk involved in audit process. So these are the key things. So whenever you need to be make strategy, any audit strategies or any in a business strategies as well, always look around what are the legislations behind, because if you're not addressing in your strategies, action planning, you're not well aware of the legislation, it means you're going to violate it, you're not going to. So we don't want to be compromise it, and ultimately because audit is under the great scrutiny, so we need to be very well aware of, So International Federation of Accountant, they said the international it's a code of practice, International Federation of Accountant, and then International Audit Standard Board, they set the standard for audit. So those we need to be follow. We need to follow the international accounting standards and audit standard boards, other standard, international standard on auditing and international standard on quality control. During our last lesson, I already mentioned you ISO 9000, which is a quality standard. So quality mean what we are saying, same thing we are doing, and we have a documentary evidence as well. So that's all. So during one of lesson, which is always good to be when you make any audit plan or any audit strategy, we need to be look around, we need to be follow and adopt are based on this, so we need to look around the materiality. What is meant by material?
Anything which amounts to some significance, which has some significance, value.
Well done. So materiality, so in a business you plan, so you need to be well aware of in each industry some transactions, some activities are very material. So we need to look around. So those materiality issues within audit, so we need to be planned for those as well. So we're not going to miss any material things, when we do audit. Any question? So we already discussed about IES 300 planning. What is a strategy and action planning, engagement characteristic, how we engage with the various stakeholders, reporting objective. So all this we discussed during last lesson as well, which is quite overlapped with the legislation. So I'm just going to skip it. Okay, next now, audit strategy. What is meant by strategy?
Kind of the action plan which you mentioned, we will follow while doing an audit, performing an audit.
Yes. So a strategy mean action plan. So when we make the audit strategy, so we need to look around the framework, we need to look around the industry reporting, knowledge about the business. So you must need to be good understanding which industry you're going to do audit. Do you have a background knowledge of the industry? Do you know the company mission, visions, and values? Do you know what sort of information system they are using? So you can check those processes are properly working in order or not. Because audit means to checking the accuracy in the book of account, in the processes, in the procedures. So all these we need to be well aware of. So materiality, we need to be checked on the transaction. You assess the risk. What sort of the risk, which we'll go through for this slide. Any question?
No, sir.
Okay, so all this is audit strategy. Audit planning. Audit planning meet the deadline. Yes? Set the
Yeah.
timeline. Give your workers or your employees in an audit firm. So what sort of times we have. So all this we need to be well aware of. Billing review process, assess materiality. So these are the steps really we need to be follow. So we need to be look around the knowledge of the business analytical review, efficiencies and effectiveness, how we can make the organization effectiveness in meeting the benchmark and efficiencies working quite outstanding above than the benchmark. So these all come. Any question there?
We're
So
fine with this, sir.
sorry.
That's all
Is
right.
that okay? Well then, so let's next we really focusing on LO3, which is learning outcome 3 strategy. What we discuss at the top, other mind maps as well. The audit strategy set the scope, timing, and the direction of audit. It's allow auditor to determine the following: the resources to deploy to the specific audit areas, experience level, external experts. Those are properly amount of the resources to allocate, number of team and members, because it's a big organization, you need more employees, more resources. And you maybe when you claiming the fees, you can look around and you can charge the fees from your client accordingly. So when the resources are to be deployed and resources are managed, directed, and supervised, including timing of meeting, debrief, and review. Yes, when you have a meeting with uh, the all directors, with all in management, and you can give your finding and you can listen their views, and always good to be cross-examined your finding with the various. So we're not going to miss it. Are we not going to develop our own opinion without base, with those are the baseless? Those don't have a basis. So we need to be look around cross questioning and developing consideration in establishing the overall strategy. When you make the overall strategy, what you look? What is the financial report framework for financial statements? Under IEF, so like you need to be look around IEF 16 for suppose International Financial Reporting Standard 16, which is just recently been released for any company who's dealing with the finance and the operating lease should be reflected in the financial statement. So if you don't have a knowledge about IFRS 16, how you will check, these are the statement are prepared. So as a auditor, you not only need to be follow the standard of audit, you need to be follow about the accounting standard. You would need to be understanding. So are the industry specific requirement listed companies and the charities? You need to look around the number and the location of the premises. How many places the company has operation? So you can cross check it. You can reach it up to that. So you need a resources for it in your strategy. The nature of the client and the need of the specialist knowledge. What set of specialist knowledge? Like if you're a machine working in machine automated, so you maybe in your audit team someone have some background about knowledge or aware of how the things work, because some audit can be very technical and your opinion should be based on properly determines all the facts and figures. The reporting currency, or often the organization report the effect of the IT on the audit procedures, including availability of the data. So because you're looking the data is being accurately recorded, you're looking the invoices, you're looking the transaction, you're looking the processes of payment. So all these we need to be look around and we need the data for it. And when you're making the strategy, so reporting objective, time of the and the nature of the communication. So all we need to focus the timetable for interim and the final reporting, organization of meeting with the management, expected time, the timing of audit and reports, how will communicate among the team members, and whether expected, like, end of each day we will do Skype meeting. So what time meeting will start? Before that, wherever you work in various departments, if you're doing audit, whatever your findings are, the points you pick them, so that you can write down in the next day. Maybe we can arrange the meeting with the management to discuss those points to clarify it. If not, then we can develop our opinion. So significant factor, that preliminary engagement activities. So you need to look around the materiality, result of a risk assessment. So go through the risk assessment, professional skepticism, your professional skepticism, your professional judgment, result of the previous audit, evidence of management and commitment of internal control, volume of transactions, significant, maybe we looking the 10% of the 10% of samples from these transactions, maybe what's the sample techniques you will use as the editors, because of our whole audit not mean you checking each and every transaction, because it's a very costly process and it takes a while. So we as a editor to pick the things and develop our understanding and give the views to the user that this company is a going concern, the company will carry on doing as business. Significant industry development, financial reporting, timing. So all this we need to be focused. Any question there?
No, sir.
Okay, when you write your assignment, so please you need to be focused. So I'm using these slides. So this is audit risk. What is meant by risk?
The probability of something happening.
Yes. So this is your learning outcome 4 is based on the audit risk. So risk is mean anything is a probability of happening something. So definition, risk is issuing an inappropriate audit opinion. Yes. So risk can be in an audit, we develop our inappropriate opinion. That's not appropriate opinion. That's not based on the factual. Yes. We're not supposed to penalize the company. We give true and fair view about the thing. And only we can do when we'll minimize the risk. Yes. So, so there are the 3 majors of the risk: inherent risk, control risk, and detection risk in audit. So suspectability of the balance of misstatements before the consideration of the control, which will go through inherent, the system we have in place, inherently risk involved. So depends when you're dealing with the currency, foreign currency, there is a fluctuation. Yeah. So we need to look around how we can, that's inherently risk is there. Higher risk, a client in volatile industry engaging in the foreign currency transaction, rapidly changing in technology. So there can be inherent risk. Control risk, the risk that the client controls fails to prevent and detect misstatement. So the control system within an organization that's not appropriate to detect the risk, to minimize it, eliminate it. So think about the people stealing money. Do we have a system in place so we can detect them? Do we have a 3-page, anybody can raise purchase order. So we need to look around. If anybody can raise the purchase order, there is a control risk. How will you make sure? If you're paying the cash to workers, there is a risk, the tax not being paid according to the. So we need to be look around. These are to be minimize our risk. High risk, old or ineffective accounting software. High risk can be in a control. So lack of segregation of duties, accounting duties. So, same person doing purchase order, same person dealing with the cash receiving, same person. So there is a problem of segregation, and anybody can do any activities. People can rotating. So how you can someone you can say that was your responsibility, you're supposed to do it. So there can be a problem of control risk there. Lack of authorization procedures, there is no authorization, anybody is their own boss. Yes, anybody can do anything. So we need to be look around. Detection risk, the risk that auditors fail to detect. If you, that can be in audit, you don't have knowledge, you don't know where their office is, and you can't identify the risk, so that's really you need to be identified. Higher risk using inappropriate procedures and misinterpreting the result. So your result, your ratio analysis, for suppose you can misinterpret. So you need to look around what is the industry averages. So next we're looking now uh, under the risk, how a detail need to be know about the client and the client environment. Yes, knowledge of business. Yes, knowledge of industry. So if you used to be manufacturing industry, textile industry, you used to audit. So you need to think about where the cotton come from, how they can, and where is the end product, how they sell it. Yes, they are reflecting in their book of account, and they are following uh, international accounting standard or any local accounting standard, whichever the standard company is following. Yes, so we need to be look around. Activities, management, systems, control, accounting policies, risk, industry, competition, technology, laws, regulations, stakeholder financing. So all you supposed to be good at information. Information from you and your team, discussion, experience. So all this we need to be to develop our so audit risk. In addition to the materiality, the auditor need to consider the risk when determine the nature and the timing, extent work. Risk affect the extent through the audit model, accept audit risk, acceptable level. Yes. Inherent risk, control risk, deduction risk. So auditor need to assess audit risk, internal risk. Yes. So all these are the risks to calculate overall risk. So basic goals of auditors to gather sufficient appropriate audit evidence, to provide reasonable assurance, so to reduce the risk to an acceptable level. That a financial statement don't contain the material misstatement, the auditor fail to deduct, that's a deduction risk. So these are all. Next we're looking now what are these, acceptable risks. So we need to look around the financial statement content, financial statement material misstatement. So provide clean opinion. Okay. Yes, carry reduce risk. You need to be look around further dig out and qualify as opinion. Unhappy clients or details may do more work to resolve the conflicts. Yes, we'll further get more evidence. So assessment, acceptable audit risk, extend user reliance on financial statement, publicly traded companies or private traded companies, significant creditors, you need to look around how many creditors, size of the company, especially reliance on reports, likelihood of fraud. Is it how much is the likelihood there? Is it chances are more than 60%? So you need to be look around. Likelihood of the financial difficulties after issuing the financial statement, maybe when the statement issued after the Brexit happened or something happened, that's the share value of the company or the significant contract company being lost. Like various company that came in the media and now is under investigation. Yes. So the statement was produced before. So you as a editor you need to be observed. Competence of management, industry, and the financial assessment of. So as a risk engagement increase, the level of assurance provided need to be increased. So acceptable audit risk will be decreased. Any question these points?
This last point, sir, as the risk of engagement increases, level of assurance to provide increases.
Yes.
So accept audit risk
Because
will
when you're dealing with the massive, the company's massive assets, yes, your risk increase. So your level of assurance need to be increased. Yes.
Okay.
So you're getting from the bank, they have a cash in there. You're getting from the supplier and the customer, they are dealing with it. Yes. How they getting the payment. So your audit risk can be decreased. Because of course, the risk is there. You don't want to develop your opinion that can be penalized to companies. Because your one word can be reduce the company's share value as a editor. So the audit risk is reduced. More work must be done and fees must be higher. So if you're saying, no, we'll charge 1,000, we'll sit in our office and we'll give opinion based on your financial state. You're not going in the physically warehouse, you're not checking it. You can ask, according to IES 2 International Accounting Standard 2, inventory need to be recorded and the lower the cost or net realizable value. So you need to check it, the inventory record in their book of account at the time when they bought it, and you test it that what is in the market is the value now. Yes, or maybe you can get the views about any expert person, and that fees you can charge from the organization as well.
All right.
Because of course otherwise you may be saying they have a Windows 98 CD, but that Windows 98 software they bought in 1998 2000, and that time no is a Windows 10, Windows whatever window we have now software. Yes, and in their book of account is a value at that date when they bought it, because now that is not a true reflection. That need to be created. Maybe there is a no value now, or maybe in pennies now the value of the CD, but still in their book of. Yes, when you giving your opinion, you saying, oh no, they have a stock or they have a this and that, but you need to be to reduce the audit risk because you're not giving the right opinion. Okay, appropriate level of audit risk. Audit must be performed sufficient audit procedure to reduce the audit risk. Appropriate level. Risk is always there. Acceptable level, yes. So suggest the highest limit should not exceed 5%. Protect customer of audit report. Protect profession. Protects the editors. Typical, the lowest achievable level of audit risk is 1%. Why do you think is that? Component of audit risk. Probability of material error in the financial statement. Undeducted after the audit. So like Enron, auditor giving opinion that the company is a going concern, company will doing normal business. What are they doing now? But after 3 months, they can't afford it, pay money to their workers. Yes, company collapse. So that's a huge audit risk. So why auditor not pick the thing? Yes, why they not pick the fine of it? So it means they just relies on the financial statement, whatever the figures in. They not check in the bank. They not check with the customer. They not check with the supplier. They not went to the warehouse to observe it. Yes. So these are the problems there. So that's we can reduce it. Inherent risk, probability of material error occurring in the first place. A list of the factor affecting. Yes. So you not really observe it. Yes. Probability of material error. Control risk, probability of the control system. Yes, system is running appropriate. You have a realize. Did you check it? You can say maybe, can you clock in please anyone? Yes. Can we say that clock in time is on the system is recording properly? If we're looking HR, yes. Time and wages process. Can we say, can you run the wages process? How you pay the wages, how you calculate the time, how you calculate the overtime. So that's the control. If there is a no control, that's a control risk. So deduction, probability that the editor failed to deduct. So we need to reduce that risk. Yes, we should deduct it. Given internal control fail. So that these are all the risks is coming. Audit risk, determine the acceptable level. Inherent risk, assess and justify. Control risk, assess and test. You assess it and test it. Oh, ask someone. Yes. Control system. Deduction risk, perform sufficient work to result audit risk being reduced to desirable. Audit risk equal to internal, inherent risk, control risk, and deduction risk. All these risks is make our audit risk. Any question? Factor affecting inherent risk. So nature of the business, industry, economic condition, nature of the data processing, management, all these are the points really we need to look around under the inherent risk. When we're looking assertions, how we'll make sure, we'll put the procedures in place, and audit program are the list of procedures. Yes, each transaction cycle we look around, and each assertions of each, financial statement, what the processes are, do we can deduct it to minimize the audit risk, preliminary definition of key concept, internal control we can look around, yes, compliant test we can do, substantive test we can suggest, maybe we can do inventory test, yes, we can do account opening test, we can look, credit control, when you give somebody credit or you sell goods on credit, so what procedure you use, are you giving anyone will come and buy it, you will give them credit, so there is a lot of risk, company can collapse in future, so auditor jobs to be look around. Okay, the audit planning steps, pre-plan, obtain background information, client legal obligations, yes, analytical procedure, so all this we need to be look around audit planning steps, yes, when we do plan audit, so we need to be look around the background information, client legal obligations, yes, and if the company is changing auditors, why they are coming to us, yes, so first question you raise, maybe other auditor gave them opinion that's not in their favor, and they want to come us, and they're assuming that we are very lenient with them, yes. So we need to look around, and we need to get the evidence from the old auditors. By law we can transfer their files. So pre-planning, yes, client acceptance continues, are these we need to look around, identify the reasons for audit, obtain engagement letter. Yes, engagement letter is a letter between you and your client. Yes, select the staff for engagement, purpose of the client's acceptance. Yes, integrity of the clients, availability and the quality of the audit evidence, avoid the loss and violation of the rules, financial health of the client. Yes, going concern, they are in a willing, they are in a position to pay us fees. Yes, avoiding laws, any cases against them, payment of fees, assessment of ability to conduct audit. So always we need to look around information for the client, selection, retention, decisions. All we need to look around, and we need to go through information for the client, selection and retention decisions, other sources of information, financial information regarding clients, industry. All this we must need to go through. Any question there?
No, sir.
Okay. So these are pre-engagement, yes. So what step we need to be do for audit planning and making, yes. All we need to evaluate, we need to clearly background information about the clients, all these points, yes. Gaps is general acceptable accounting standards, yes. And we need to working papers, yes. All we have or not, do we have access on these, how we'll get the access, how we'll ask to the client. So these are
what are working papers?
Working papers mean, those are the things which is under considerations, yes, or what activities we'll do, and these, that's the editor make the working papers, properly identify the company, period, description, contents, initially prepare, date, preparation, and index code, yes. Index cross-reference, looking, like invoice cross-reference, yes, in the statement, how they they make, the total debtors, yes, total creditor figures, we can check it, the statement of the work performed, yes. So different, the work those be, because company have normally internal audit as well, yes. So external audit, if we are external auditors, how much we can rely. Yes, so we can prepare our own working papers on the points which we need to work, and then we can draw the conclusions based on these. Any question?
That's all right, sir. Thank you.
Okay, so today we learn about, so just a bit, so today we just learn about LO3 and 4. LO3 is the audit strategies, and you can discuss about the steps involved making strategies like engagement, yes. what is the strategy, what is your roles, what sort of legislation, so all can be discussed. And we discuss about audit risk is an inherent risk, control risk, yes, and deduction risk. So these all risk, we need to look around and we are supposed to be discussed what's come, under the inherents and all. So these, please, you need to be follow in your assignment, these points as well. I already send you some things or handouts separately, which you can read, and you can, when you prepare your assignment, or if you want further, background reading, so please do so as well. And if you have any question, just drop me emails. So my email is there. Please and try to attend the session from next week if you can. And next lesson will be our last lesson. We'll recap, whole all our learning outcome as well, and we'll go through LO5, which will be our last learning outcome, last assessment criteria. And just is my email there. And have a nice time. Hope so. I will speak you all by next lesson. Bye bye.